Welcome back. You're still tuned into Trading Hour. The market continues to inch higher. So we're now around 85 points in the green for the Nifty, 90 points higher now. And we are at the high point of the day. What, in addition to PSU banks, is really sort of helping the market today is the IT pack. It has seen quite an up move in the past couple of minutes that we have been talking as well. So some of the larger names will come up for you. HCL Tech is the top IT gainer in terms of the large caps. You have Infi, TCS, all of those others doing well as well. And you also have Reliance, which is playing and really supporting the market today. So that one is also coming up with a good gain after a couple of days of being a little bit subdued in trade. So that's what's going on with the market action. But on that note, we're going to wind down on this edition of Trading Hour. As we do that, we leave you with some important opinion. This comes in from Mahesh Patil of Aditya Birla Sun Life AMC. Thank you so much for watching. Halftime report after the short break.
We have been a bit cautious on the market here, though nothing wrong in terms of the fundamentals. I think the overall outlook on India looks fairly good. We have seen a decent amount of recovery over here. Demand has been fairly strong, and rural economy is also picking up, which is giving legs to the consumption, which was kind of weak last year. And there has been a steady pickup in the investment side also. So all in all, I think the outlook on India looks fairly strong and robust. The relative valuations where India is vis-a-vis the rest of the world, and especially the emerging markets. And to that extent, I think we've seen that recently there has been some amount of trade where money has moved into China, Korea, Taiwan, which were kind of beaten down and valuations were looking very attractive. So relatively, we've seen some outflows there from the FIS side. Overall, I think we're still very positive on a, say, next 2 to 3 year perspective. We see earnings growth in the region of around 13 to 15% CAGR over the next 3 years. And market should give reasonable returns from here. The banking stocks have done much better. The PSU banks have actually done even better recently because the valuations there were very, very depressed. And we've seen a very, very benign kind of a credit cost cycle. But I think the NBFCs, some of the NBFCs are now, they're still not really done as well because in a rising interest rate environment, we've seen that the banks have actually benefited in terms of NIM expansion, whereas NBFCs have seen some kind of a NIM compression. But as the asset side also kind of rebalances, right, the rates over there, I think we should see the margins on NBFCs starting to improve in the next, probably in the first quarter of next fiscal year. So I think some of the NBFCs are now looking at fairly reasonable valuation.
Co-powered